Wake up, motherfucker.
All right. What's up? Hello. Good morning. Good afternoon. Good night. Whatever. Uh, all right. Oh, I wasn't. I was doing something else. All right. Too damn busy here. Anyway, if you followed my advice, you would have made a lot of money these past few days, right? UwU, SOXS, short Palantir. They all went crazy today, so we're doing good. All right. Let's see. Saw headlines, dude. I don't know when you read those headlines. Like, things change every second now on gold and silver, so news doesn't matter. Follow the charts, guys. Follow the charts. All right, let's see what we got here. And so I got my thumbnail right. I said I told you so. I told you so. So let's look at Palantir. Here we go. That's it. Done. So I shorted Palantir from here to here. Waited for earnings. Patient. It popped up. It went right through this level. So always watch your support and resistance lines. 162, 148. Went through there, shorted from here. And then this morning, we opened below this kind of minor support resistance level at 156. Shorted again there. Sold out of my short there. Kept some of my shorts. Went down a little bit further. Sold the rest. And we're done. We're done now. Okay, guys. So that's the end of that short. Will it continue? Wait and see. Wait and see tomorrow if I will re-enter, or I'll wait for Thursday or something. Or I mean, not Thursday, Friday. Okay. Anything else with that? Nope. How big's my portfolio? Dude. I mean, which one are you talking about? Trading portfolio or investing portfolio? I got so I'm basically a boomer, man. So you can imagine. The only thing I don't really have is real estate. I mean, I hate the idea of owning houses and dealing with that shit. I've always been a stock guy, so that's how I always treated things. Stocks don't have tenants and stuff like that, and whatever. Yeah, basically. So in this show, all I'm doing is teaching you what I've learned over the years of doing this shit. So if you follow my philosophy, then I'm pretty sure you guys can do a lot better than I can. You're younger. You're willing to take more risks, I assume. So you'll get it. All right. Oh my God. Junk phone calls. Survey. You want to take a survey? Fuck off. All right. Anyway, here, let's let me do this. All right, let's look at this right here. So this is a NASDAQ right here. We got a 4 count going through the Ichimoku cloud. We're going to probably retest this area at 24,000. So NASDAQ 100. Probably it'll take a while. Probably next week. Okay, that's my guess. So what's important though is, yeah, here you can look at this. I took a quick screenshot of one trade here. So this was the trade I did today. Then I had another LTZ trade from yesterday, right? So this was just a quick one. That large candle that took about like 30 minutes to complete, done. 30 minutes, you make $2,000. Why not? Don't need to fucking why you need to go to work, bro? So I'm telling you, once you got a system going, you just keep doing it, man. And so you should be able to knock them out like at least like 5% every day. Every trade you make like during this time, you should practice, if you can consistently get at least 5-10% every trade, that's enough. And you just put in your money back in whatever you make, and then keep doing it over and over and over again. And you don't need to make 100 trades. You just need to make a few dozen trades every quarter like this, and you should be able to build up your money, and you're done. Yeah, you don't really need to go to work anymore. But you got to be consistent, though. That's the key, right? So we did the mathematics of it 2 streams ago. So go back, look at my February 2nd stream, and you can see what we have to overcome to achieve that. Here's the cycles right now. So this is the semiconductors. If this this line here, this red line, so this is a cyclic RSI, if it breaks through the bottom of this band, then I can say for sure we're going to go down very steeply into April. Now, this is the NASDAQ. We already broke, so I'm guessing we should be able to easily pull down. There's no guarantee, though. It could keep going sideways for all I know. It might not even like complete its way down. But if semiconductors don't help, I'm assuming it should be easy. Same thing, S&P 500, you can see here. It's going to roll over till April, right? Before it pick up again in May or sometime, or June. It could last until June. All right, we'll have to wait for that. I'm going to read some cycle stuff here. No. Article. All right, done. All right, I got to go knock this stuff out quickly for you guys. Okay, so go back to the chart here. So I told you guys to short semiconductors, SOXS. All right, I said like around below $2 you buy, get above $2 you sell. So that's what I did today. I sold everything that I bought the past couple days. Yeah, so whatever there, we got like what 15-16% at the top for today, right? So if you bought a little bit earlier than that, you probably got like 18% off of this. So that's good there. And then what's the other damn thing? Oh yeah, you could have shorted MSTR today too. Again, like MSTR is like so weak. The Bitcoin is so weak. Like it didn't even bother trying to get above this green candle close yesterday. So this line of 129, it broke right through it again, right at open. You can short it again, and then that's it, done. And you could long a little bit for a little while to get a little bit. So you could have done this one. I didn't do it. I was just like, whatever. I'm done. I'm not going to waste my time caring about that today. Okay. We'll probably talk about a little bit more about Bitcoin. Maybe if we got time. Let me see. Anything interesting with Bitcoin? So Bitcoin overnight is looking like trash, though. Yeah, this. Oh my God! It just wants to puke. Oh man, it didn't even hold this. So the overnight on Tuesday. Okay, well, bruh. Okay, well, okay, maybe tomorrow, if it holds like this, I'll go into MSTR short. So MSTZ. Okay, this you can short it this way. All right, so we already been going from 14 to 21. So if it goes in a straight line, this thing does very well. Let me show you. So here. So from October, right? So when you go in a straight line, these inverse ETFs do really nice. So usually you're supposed to get only a 2x leverage on this. So every day it does 2x. But if it goes in a straight line, it does a little bit more than that. Okay, so this was supposed to be only like 150% gain, but it was actually a 300% because Bitcoin just went flushing down directly. And then if you short MSTR, it's going to be really nice. I think they have earnings next week or something. You could probably try to like short it all the way until next week if it's really good. Okay, what else? UwU, I said oil is where you're gonna want to go. So all oil, I mean the silver and gold guys, just go there. So right after I recommended that night, the day it opened here. We're already up like what, 20%? I don't know. I don't think we're 20%, right? No, it's not 20%. Almost 16%. All right. So I'm holding this one. I think it's gonna keep going up. We'll have ConocoPhillips. We'll have Shell earnings. So I think we'll be fine. I think this thing will keep going up. Okay. Anything else to talk about? Let's see earnings. So we got Google earnings. I don't know. The market was undecided. It was down 6%, went back up 2%, then it just went back down negative 1%. But Coherent, the optical cable manufacturer or whatever, I think this was down 8%. ARM was gonna be down 7%. Qualcomm 8%, 9%. So outside of Google trying to hold things up, these three have gone down. So I'm assuming semiconductors should try to sell off tomorrow at the open, but we'll see if that's true. I'll re-enter SOXS. I don't know. I forgot what Snapchat did. I don't think it was anything important. Yeah. And we got, I think for makeup stocks, ELF was up 20%. So this thing should pop tomorrow. So it'll be interesting to watch, see if it can get up to $90-something, or maybe it'll just roll over. I don't know if I'll get into trading this tomorrow. Like if this thing can close the gap here, so you see this gap, this level here. Yeah, let me just make it bigger. Let's see. Okay. All right. So let's say it gets to 95. If it can do that tomorrow and start pushing up, yeah, maybe I'll trade it. Maybe I'll get to 120 into next week. I don't know. We'll see. ELF. So, okay, that's it. That's it, right? Oh yeah, MSTR. Oh, I guess they got earnings. Yeah, Thursday after the close, MSTR. So yeah, watch that one. Maybe you can short it into Friday. Maybe that's good. It looks pretty weak. Bitcoin just looks way too weak now. It's not even trying. It's not even trying, bro. Okay, gold. So let's look at gold. It's puking overnight right now. Yeah, so I did a little short on gold miners. So I used GDXD. Okay, so I went in here at 4 something, got out at 5. If this thing keeps going short, I'll go back into it. I don't know if it's going to be a big drop. All right. So let's look at the daily. So you can see the daily chart here. So we already bounced, and the moving average is still going up, but looks like we're going to fall back below the 18. I think we're just going to zigzag here. Okay, so you short up here, go down here, go long again, go back up, go back down, go back up. I think that's what it's going to do for the rest of the month. 2 months, 3 months, maybe 4 months, maybe even 6 months. So you can trade this every other day or every day at this juncture. There's going to be no direction. I don't think it's going to crash all the way through that. Okay, so let me see. See GDX. Yeah, so I would say if you look at the GDX chart, 84 to 100, 84 to 100, maybe the new range. If it breaks 93 anyway, so that might be where it's going to be, or it's just going to have this tight range. If it has a tighter range, that'll be very interesting to see, because if it does keep it tight, then there is a good chance it could just rocket up. But if it can't keep the volatilities low here, then yeah, it'll just expand and go all the way down. So that's what I would be thinking. Let's look at silver. Oh my god, it's already breaking the 40. It's down 13%. Oh man, silver looks terrible. God damn. Okay, I don't know. Holy shit. Yeah, silver looks really bad. Okay, I'm guessing if this holds overnight, it will expand then. So that means if you short GDX using GDXD, you can get a good run here. Let's see. So let's say tomorrow I short it and it goes down from there to there. So I get 12%. I could get a 30% tomorrow. Okay, so if I get GDXD, let's say it opens at 5 something, 530. Okay, so 30%, I can go to 7. So maybe tomorrow I'll trade this one. All right, maybe this is the one to do. Okay, so MSTR, look at that to short using MSTZ, and then look at gold to short using GDXD. So if it opens tomorrow, I'll initiate and then watch what it does the rest of the day. Okay, so it might be pretty quick. You might be able to get out within 30 minutes and get out. See, most of the trades I hope for to be done within 30 minutes, and I'm done for the day. That's it. That's all you gotta do. But if you look at MSTR today, like the problem with that is I didn't play it because the way it kind of didn't roll over quick enough. You know, you look at this, like if I look at the 15 minutes, watch what it does. It's fighting, right? It's going down, it's bouncing back up, it's going down, but slowly. It does a little crash here and then it bounces back. You see, it's not fast. Like you want something like Palantir, so you save your time. You just want it to be done and then you get out. So, you know, you see this, you're done within an hour. Like this is 30 minutes right here. And then the rest you can keep for the rest of the day, but you're not even paying attention anymore because it's just like whatever. It's just dying. It's just slowly dying off. But most of the gains is here. Boom, done. I'm done. I go. So I don't need to work, right? After 30 minutes, you make 2 G's, 2 grand from one trade like that. Why do I gotta show up for work? Don't need to show up. All right, so that's it, man. That's all you gotta do. You holding on to SockX? No, I sold. Because, okay, the reason why is because you look at the chart here. So you look at the SOXX chart. All right, this is where the SOXS and XOSL come from. Look at this. Look at the daily. The daily, bam, right there. 40 moving average, bam, right there. Once you hit that, you get out because it's going to try to fight. So now, why do I use 18 and 40? This is what Joe Rabel uses. So he's kind of like a fan of using 18 and 40. And he uses it everywhere. So it's very convenient. I don't need to change my settings for different charts. So every time I use like a 78 or hourly chart, daily chart, whatever chart, I use the same 1840, 1840, 1840. It's fractal. So, and the reason I use 78 minutes is because I divide by 5. So there's 5 trading days in a week. I divide the trading hours, the regular trading hours during the New York Stock Exchange, divide it by 5, you get 78 minutes. So I use the 5 cycle. If you use crypto, you got to use 6. I think 6 is the ideal because they run 24 hours a day, right? And then if you use futures, you might have to do a mixture of 5 and 6. I don't know. I haven't tuned it because I don't use futures, so I never cared. But you'll probably figure out like there's an optimal number here, division. Okay, so that's it. And then if you look at the weekly, we still have room to go. So you can still short it to 306. But for now, we are probably going to fight. There's going to be a struggle. So I'm not going to stick around for that. I get my money, I get out. I'll come back later when it's time to short it again. The time to short it again probably isn't going to be tomorrow. I don't think. Unless the Google results aren't good enough. You know, if they're everything is for AI spending. If they believe Google, Microsoft, all the AI companies are spending lots of money for infrastructure, then all the semiconductors will try to stay up for the rest of earnings into next week. But if it can't, then that's it. Amazon will be after Thursday. So they'll be looking at how much Amazon spends on AI, right? That'll be important too. So you got to take all of that into account. Yeah, semiconductors are like the picks and shovels. So the gold rush is to come up with all the inference models and all that, right? That's the goal, to get customers to pay subscriptions, and how many times you ask like Gemini or Grok, whatever. But the real money is in the picks and shovels right now. So that's where it's at. Okay, that's it. Oh yeah, I forgot. So the other things in the NASDAQ is what? Let's see. Communication services, right? This internet index. So this week it's down 4.7%, and it's clearly below 285 here. So that's going to put a lot of pressure on the NASDAQ, because then the NASDAQ, the only thing that's going to keep it up is the semiconductors, because the other one is the software side of things. So all this stuff, look at that. It's down 7% so far this week, and last week it was down 7.5. It's almost back to the April lows from last year. Yeah, you're done. It won't take much to crash the NASDAQ at this point. It won't take much. Okay, so you can short the whole damn thing. All right, anything. We all gonna win, but you gotta understand how we gonna do this together. Yeah, what's up, King? Yeah, what's up, Dalmatian? Yep, what's up? Okay. Guy, bro, idiot, what's up? Tropes, yeah, what's up? All right, guys. Yeah, what's up, 12th man? Yeah, what's up, Revenge? Yeah, your dick be smelling? Yeah, you better wash that cock then. I don't know. But if you got a foreskin on, you gotta roll that back and wash it real nice, right? Okay, anyhow, that's not what this show is about. Okay, let me see. Let's see. We're done here. Okay, good. I think we're good. So let's play this video from Asmongold. So if you want to know more about what's going on with the Palantir, here we are. He had a great clip today.
On tape advising former Israeli PM Barak to approach Palantir founder Peter Thiel.
There's two cyber companies. Look out, and even though I know Peter, I've never met Peter Thiel, and everybody says he sort of jumps around and acts sort of strange, like he's on drugs.
Smoking, yeah. He looks under drugs.
However, he has a company called Palantir, P-A-L-L-E-N.
Palantir, P-A-L-A-N-T-I-E-R.
This goes all the way to the top.
He's talking about the verbal dyslexia.
So he thought that Peter would put you on the board of Palantir. Peter Thiel is one of the best. I've never met him. He's going to come here next week.
He's one of the best. I've never met him.
What they are? It's a lobbyist. What they are doing?
They are the biggest venture capital. Everybody, these are the smart boys. So those two companies right away.
Approved by Jeffrey Epstein.
I think.
How'd you get introduced?
It was Reid Hoffman in Silicon Valley introduced us in 2014. I probably was my moral weakness that I.
Well, how could you have known back then? He had never been arrested.
No, this was 2014. It was post arrest.
Oh, so his arrest was the first arrest, right?
Yeah,
which was like 2007.
Well, that's what happens.
Okay. But you assume he didn't go to jail for that long.
Right.
It was probably not as serious as alleged.
Yeah. When the shit went down and Epstein gets arrested for the second time, we're like, oh, well, there you go.
I've thought about it.
I've thought about it. Yeah, I bet. Ehud Barak hides his face as he enters Jeffrey Epstein's mansion.
Former Prime Minister Ehud Barak covering his face as he entered the convicted pedophile's home. This was back in 2016, and on the same day, a group of young women were also seen arriving at Epstein's home. Barak is already trying to distance himself from Epstein and their business partnerships.
Even more of it. What's the future of Israel?
I mean, something will happen in Iran. Maybe we'll succeed, maybe we won't. But the demography seems terrible. Nobody sane seems to be procreating, and everybody insane in their own way seems to have 5 children. If you're regular Israeli, you have 1.5 children.
I think the Arabs are going slowly. They were 40 years ago, they were 16%, now they are 20%. We should be able to make...
So they're talking about like demographic
provide
changes.
equality. First to the Druze, they are about 1%, they are totally Israelis in their behavior by security people, by
Man, no way. No way. This is from Jeffrey Epstein. This is not me saying it. It's Jeffrey Epstein saying it. This is the way the Jew make money and made a fortune in the past 10 years. Selling short the shipping futures. Let the Goyim deal in the real world. Goyim were born to only serve us. Without that, they have no place in the world. This is insane. Stop being asymmetric. Listen, I mean, anybody, if you're looking at this stuff, you've got.
Oh, yeah. All right. Well, let's get this channel struck then. All right, guys. Yeah, Video Ninja. That's what I told Schizo Spud to use. He tried it out last year. It takes a lot of work to figure out how to make it work correctly. You have to talk to him. There was a whole stream where he just was like testing it out, trying to figure out how to make it work. Yeah, man, if Schizo comes back, you gotta talk to him how to get that thing to work. It's amazing if you can figure it out, like, because you don't need Discord, you don't need StreamYards to make a panel. It's amazing how you could do it with just a website like that. But yeah, let me see. Okay, so here you go. Yeah, Video Ninja, and then here's the stream. Okay, so here's the stream. Okay, and there we are. All right, hopefully it's put into the thing. There you are. Okay, man. So that link should be in your kick. So go to that stream and you can watch him with John Frederick and me. I joined later in that stream and we all start helping him trying to test it. Oh my God, you're just testing it to go live? Oh my God, I don't know. Good luck to you. Good luck to you. No clue how that crap works. The Goyim can't figure it out. All right. Okay, let me figure this out. It ain't bad. I read the manuals, homie. All right, cool, man. Yeah, Schizo, I don't think read any of the manuals. He just loaded it up and was trial and error that whole time. It was a wild night. And let me see. Okay, what other videos we got here? This one's kind of old, but I'll play it anyway. I'll play this one.
Look at the termination here of the uptrend back in 2011. Pretty aggressive move down. Then you have to look at the current cycle and the stop in action in 2020. That led to a multi-year trading range and a much larger change of behavior. And this is what I would be expecting, but not to the same degree of the complexity. I think now we are most definitely in the change of behavior. We just had the climactic action. I've been leading you to that type of the event to happen. We're expecting that already in this area with this type of volume signature that is high, something akin to what we've had here in this area, that we're going to have some supply as an opposing force coming in. You could be using just the sequence that I've given you right now as well. I think that now the attention probably is going to go somewhere else. And as we had right here, everybody was in gold or silver at this point right here. But when this happened, that's when a lot of market participants decided to leave these positions and not to trade it because it just became somewhat dull.
So that's what I expect too. I think we are going into a large trading range, but I'm hopeful that it's going to be more exciting than that point, because after COVID, you know, the way it moved up and down was kind of really boring. Really boring. I kind of want to keep it where it's just like zigzag with high intensity. Like we'll go up and down 10% every day, right? Kind of thing with gold and silver. I'm hoping it's way more exciting, then we can trade it throughout the year. If it's not like that, though, it's better to just stay away, because it's really hard to guess when things are at a top and at a bottom. But if it has a structure that you can read really well in a range, you could trade it. All right, and then I'll do it. But otherwise, I won't touch it ever again. There are much easier trades to do. Yeah. I found the unlisted video by the developer that walks you through it like a toddler. If a person just gives half a fuck, you can learn how to do this shit. Oh, that's great. Cool, man. I'm gonna finish this tutorial and fire off a stream sometime later. This is the way to host a panel. Perfect, dude. We'll have fun, man. The only problem is because you don't have verification like in StreamYard. StreamYard, though, you can turn it on to force people to use a Google account. This is how like D-Dog always complains and tells people to stop like using verification, because he doesn't have a Google account anymore, right? He got banned. So the thing is like if you use that Video Ninja, people can porn bomb you way easily, right? Because nobody has to have a Google account. Nobody needs an email. Anybody could just join in and be like, "Hey, what's up, man?" But the fun thing is like because it's low bandwidth, you could probably get people from Africa or random places that have very slow internet to join a panel. Because like if you have to join a panel using StreamYard, and I'm guessing Discord is the same way, like you have to have very good internet to join reliably. Video Ninja is like very low and very basic. It's just a website so maybe you could like get people to join from all over the world, man. So that'll be cool. Yeah, that'll be cool. All right. Let's go to the Bitcoin thing. Yeah, what's up, Dalmatian?
Bitcoin had that move down, right? So we're seeing some demand coming in. So let's see what kind of rally we're gonna have here. Fractal comparison of this to this. Comparing this to this, there's quite a few similarities there. If this is what is happening fractally, then we are somewhere here. We are trying to produce this. Let's see if we could do that and still have some kind of lower low into the previous all-time high right here in 2021. And could we produce that next leg down? Because here, this is where demand has come in. And then the trading range has started. We don't have to have a low after that. We could change behavior here and stabilize and just see what could happen here. If that's the case, could we even think that we could probably test in this whole level, this and this, because these are the two all-time highs that we had at a certain point.
All right, so you can watch back at that clip and understand what things are going. Looks pretty clear to me, man. Looks pretty clear to me what we got to do here. So I'll be watching the Bitcoin tomorrow. I'll be watching that. See what happens. It should stop bleeding eventually, right? It should stop bleeding eventually. So let me get back to the chart here and let's analyze things a little bit more. So let's look at the NASDAQ again. Okay, so we have this rectangle area. We've been kind of dancing around it, below it and above it since pretty much since November, late October, I guess. But the main portion I kind of want to put here after this large red candle in November 20th, just before like Thanksgiving. So we have this kind of movement here, and you can see we've broken it like with 2 strong red candles. Okay, now if we look back at, let me look at the S&P here, still looks okay, all right, but still these fairly large compared to a lot of the candles that have happened recently. The last time we had such a large candle was in December 17th, and then we bounced right after that. All right, the next candle was a small red candle inside bar, and then we moved up. But here, if we come, we're not done with the week, but if we finish off the week with still this large-ish red candle, then next week should be fairly bad. All right, I'm guessing. We have to wait for the Japanese election on Sunday, so depends on the yen, right? So you'll know Sunday morning what's up by then. Okay, now let's look at the semiconductors again. We have a large volume coming in here. Now, I would guess this would bounce. This should bounce up and back into this yellow area. If this actually is a buying opportunity here, because there's a lot of volumes. Now, if we look back here, let's look at the effort and the result. All right. So let me hide the drawings. Okay, let me hide the drawings. Now let's just look at the candles. Just look at the candles. You saw this one here. This is the largest green candle we've had in a while. In a long while, okay? This is probably the largest red candle we've had in a long while. And they're back to back, right? And you can see what was the effort here. You had a large red candle, you got some significant volume coming in, and then you push it up, okay? But the next day, you kind of undo all that and come back down and actually go below this red candle here. All right, so what's the effort and the result? There was a lot of effort here with this volume, but now the next largest volume was this green candle, okay? But then we immediately followed by a low volume red candle. So there's a book called Trades Before They Happen. All right, and in that book he talks about effort and result. So you look at the volume, look at how many people have traded shares in a certain candle, and you look at the results after. If you look at this one, right, you have a very large green candle with even more volume than this red one here, and you barely get up halfway through this area here, because this red bar, I want to see it continue to blow past what this candle made. So if I draw like maybe a rectangle, okay, up here, okay, let me color it differently. All right, let's do that. You see the result? It barely gets into this range. All right, the result is lackluster. Yeah, it's a big green candle. Sure, it's huge, but it doesn't even get through into this zone set by this red candle. Okay, and then the next day, right, on Tuesday, you open up here, kind of halfway in this rectangle, and then you immediately just go right back down through it and go back down to the bottom rectangle. What's the result there? What is the result? You have all this effort and it's all given away immediately. That tells me the next several days we're going to crash. And guess what? We crashed, right? Into here. And we crashed immediately, so that's good. I didn't need to wait any more days. It went right through to where I needed to go. So I got out here. Now, the next thing you're going to wait for is, when are we going to short it again? We're going to wait for it to zigzag, maybe make its way, crawl its way kind of close to this yellow box rectangle. And once it gets close there and I see more weakness and very little result, I'll short it again. All right? Because then we're starting a new downtrend. All right? That's what we're going to start here. So let me give you that book. You don't need to read it. It's a very dry book, very boring. The idea is that you look at volume, you look at how much effort was put into a candle and see where it goes after it, right? And if you don't see strength, you don't see the results after putting so much effort in, that means you know who's weak. Okay, is it supply or is it demand? It's always gauging the supply and demand. Who's actually buying, who's actually selling. All right, so here, let me see. Okay, let me find the book title and I'll put it on there. Trades about to happen. All right, here we go. Okay. So, Trades About to Happen, a modern adaptation of the Wyckoff method by David H. Weiss. He's actually one of the mentors of that person who I played 2 clips of, where he's analyzing the Bitcoin and gold. So he was like very influential on that dude, on how to read the markets. So I guess you can buy it and read it, but in simple terms, all you're looking at is like how you look at the candles going in and out of resistance support levels and the volume that's pushed into it. So it's heavily requires that you look at volume. Okay. And if you look at the Wyckoff website, you can find all that other stuff. And I'll probably talk about it again. I talked about it enough last year. So there you go. Okay. All right, King. Good luck, man. Good luck. All right, let me read this one. Let's read this article. I've been skipping on reading this one, but I gotta read this. I gotta get to this. What Kevin Warsh means for the markets. The dollar rose almost 1% yesterday, but not much of that was about Warsh. So this was written last week, January 31st, after we got the Fed chair announcement. So this will be the new Fed chair coming in May. The dollar rebounded yesterday. It's tempting to think this was about Kevin Warsh and that the fall in the dollar might be over. After all, I've argued that the recent drop in the dollar, much like in April 2025, was about markets' dislike of the policy chaos in Washington. An experienced policymaker like Warsh might be a steadying hand and reduce scope for such policy chaos in the future. I don't know. Is that what he meant to write? I don't know. Some people gotta be proofreading these blogs. Today's post does 3 things. First, it lays out why yesterday's dollar rebound was only peripherally about Warsh. Second, it explains why the dollar will continue on its weakening cycle. Third, there's obviously a huge bubble component to the crazy rally in precious metals. Yesterday's correction underscored that. However, the structural drivers of the debasement trade runs deep. So this correction, like the one in October 2025, will likely be short-lived. Okay. So let's see. Chicago PMI. So that's the manufacturing price index. Surprise relative to Bloomberg consensus. Okay. So we got a lot of manufacturing coming in. Having spent many years on Goldman's trading floor, I've learned the value of tick-by-tick price action, which is really the only way to get a feel for what's priced. So here's what happened yesterday. Trump posted on Truth Social at 6:48 a.m. that Warsh is his nominee for Fed chair. So this was just about 15 minutes after the open. The dollar showed no reaction until 10 a.m. I mean, gold and silver was already reacting at that point. Whereupon it rose 0.5% over the next 2 hours. It's not obvious this rise was about wash, because as the chart above shows, the Chicago PMI had a very strong reading at 9:45 a.m. Oh, this is Eastern. Oh, 6:48 means this, man, it's already a couple hours before it opens. Okay, my bad. This is Eastern time, right? I'm guessing. Okay. Had a very strong reading at 9:45 a.m. A 2.4 standard deviation upside surprise versus Bloomberg consensus. As a result, a good chunk of yesterday's dollar rally, really, so this was happening, I think, Monday of last week. Or no, not Monday. I mean Friday. Friday of 2 weeks ago, right? Yeah. Was it last week? Man, I don't even remember. Fucking hell. Man, every day seems the same now. Yesterday's dollar rally really wasn't about wash. At most, it was about wash in conjunction with improving expectations for U.S. growth. Okay, so let's see. Trade-weighted dollar against 26 G10. So that's the mostly the European countries, U.S. plus Japan, and EM currencies, that's emerging markets. My best guess is that the dollar would have stayed flat yesterday had it not been for very strong data. In this context, it's worth recalling that Trump's repeated assaults on Fed independence did absolutely nothing to the dollar. Okay, that's what he thinks, huh? As the chart above shows, the fall in the dollar over the past year has been concentrated in April 2025 and again this month. These episodes were about the market's aversion to policy chaos, including the questionable rollout of reciprocal tariffs and the recent escalation over Greenland. Yeah, I already covered those things in the past 2 weeks. If concerns over Fed independence didn't get priced ahead of yesterday, that's a further argument, at least in my mind, that yesterday's rally really wasn't about wash. So effective federal. So the black line is where the Fed has set its short-term interest rates, interbank loan interest rates, and market pricing. So this is what the market thinks we're headed. Okay, in the blue or cyan. Back in the day, I'd make points like this to the head of currency trading at Goldman, and he'd shoot me a look that said, "Nerd." So let's focus on the dollar going forward. Warsh spent the past year campaigning for the job and promised rate cuts as part of that. He thinks the U.S. is in a high productivity, low inflation equilibrium and that Fed policy is therefore too tight. It'd be reasonable, if you believe this, to reset policy as quickly as possible once you start in the job. This boils down to that, in my view, we'll get much deeper, front-loaded rate cuts than what's priced, which, as the chart above shows, is only 50 basis points through 2027. I don't believe the productivity story, but I can see how it might be used to make 100 basis points in cuts in the 4 meetings, June, July, September, October, ahead of the midterms. That's one reason why I think the dollar will keep falling. So Samantha Duke also thinks the dollar will keep falling. The other is Trump's policy chaos, which will continue. Okay. You see silver. Yeah, you see that silver, gold here at the bottom, palladium, platinum. All right. Yes, we all know this. One obvious pushback to my view is yesterday's massive fall in precious metals. As the chart above shows, silver fell a stunning 26%, while gold was down 9%. Drops of this size could mean markets had a very hawkish reaction to wash, which would argue against dollar weakness. I think that'd be a reasonable argument to make if precious metals hadn't been in a speculative frenzy in recent weeks, but they were, so I don't think there's much to read into this pullback. This kind of volatility is just what happens in a bubble. As I've argued previously, I don't think the presence of a bubble in precious metals invalidates the debasement trade, which is about markets seeking safe havens from debt monetization. That's a much more medium-term driver, which is also getting expressed in rapidly rising long-term government bond yields globally and a rush to safe haven currencies. In my opinion, this means the precious metal frenzy will soon take off again, just like it did after the October pullback. Fiscal policy is just much too reckless in far too many places. Okay. Good, good. Perfect. So, short bonds and go long gold and silver again after some months. So, I predict we will go sideways for some months. And if this guy is right, so after Warsh gets in and he starts going cut, then boom, we should have a gold and silver rally again. Maybe sometime after, I guess, September. So maybe we could start off the engines up again, and yeah, we can go flying to the moon again with gold and silver. But for now, I think oil will be your best bet for the coming months, and we'll look at steel and other metals like that, maybe nickel, something like that. We're not going to look at palladium, platinum, silver, gold for a while as serious 3-month trades or longer term trades, right? So okay, good. That's good. Maybe I'll believe this guy. Definitely, yeah, he kind of aligns with Russell Clark. Okay. Okay, anything else? Should I read these articles? We have time. Let's see, 53 minutes. Any time for that? I'm not going to read these. These are in the links in the description. Okay, these two. How to use the business cycle as a proactive risk management investment tool. Part 1 and Part 2. You can read this on your own. I kind of briefly explained, business cycles to you guys very quickly. But if you want to go in detail about this, then go ahead. You can read these articles for yourself. So if you're on Kick, you should go to YouTube. So GetCrack to me. The descriptions have the links on them. So bonds, stocks, commodities. Okay. So there's stage 1, stage 2, stage 3, stage 4, stage 5, stage 6. We are probably in stage 5 now. We are entering stage 5, where stocks stop going up. They are starting to go down, but commodities are going to continue going up. So that means oil is the main commodity to watch. Okay, if oil is the one going up, then yeah, they'll lead everything else. And then after that, we should enter the bear market starting in stage 6, which will probably come around 2027. That's my target now. All right, for the bear market. Okay, so let's go. Let's hear what he has to say. Martin Pring. It's all systems go for commodities. So yeah, let's read this. It's rare for the economy, stocks, currencies, and commodities to simultaneously point towards rising commodity prices, but we're experiencing such alignment now. Chart 1 shows that the CRB index includes all of the commodities, but it's mostly follows oil. Like, let's be real. Most of these indices, oil is a dominant commodity, is beginning to breach the neckline of a massive inverse and head and shoulders formation. The following charts indicate that it probably has the power to punch through. Commodity prices are, of course, greatly influenced by the economy, which acts as a proxy for the demand side of the equation. The chart's lower panels displays the long-term KST line. So this is no sure thing. This is his indicator that he likes to use. So this guy's a super boomer. Okay, he's really old. This dude here. For the U.S. industrial production, a coincident economic indicator, the arrows highlight sub-zero momentum buy signals, which have historically preceded significant upward movements in the index. A noteworthy exception happened in 1981 when a weak signal was followed by an unusual double-dip recession. Currently, the KST is positive at a relatively modest level. This indicates substantial room for further upside movement before this indicator becomes overstretched. Okay. The percentage price oscillator utilizing 6 and 15-month parameters ranks among my preferred long-term indicators. Its appeal lies in its ability to signal turns relatively close to final turning points while minimizing false signals. The indicator generates buy signals when the shorter-term exponential moving average crosses above the longer-term one, which appears as a zero-line crossover on the chart. The positive periods are represented by the green shaded areas. The indicator currently displays a bullish stance and should provide support for the index's preliminary breakout. All right, so I think we're good here. Everything setting up nice. So it's good to have like confirmation of what I've been telling you guys for the past month. Commodity sensitive currencies are bullish. Historical data demonstrates that most long-term commodity rallies and pullbacks correlate with movements in the Canadian dollar, a relationship clearly evident in chart 3. While some divergences exist, such as in 2020 when the CRB hit a significant new low while the currency did not, the subsequent CRB rally proved both stronger and more prolonged than the dollar's recovery. From a timing perspective, currency movement provides a more robust and actionable correlation. The arrows in chart 3 identify KST buy signals for the Canadian dollar, each of which preceded some form of CRB rally. Although the 2023 signal was followed by currency weakness, the CRB still managed a modest upward trend. The latest signal, triggered last year, remains active. Additionally, noteworthy is the dollar's current attempt to break above its long-term down trend line, coinciding with CRB's effort to cross its potential neckline. So let's zoom in here. Okay. Looks like the Canadian dollar last time was 2002, so 9/11. So if you remember 9/11, right? So 2002 all the way to 2008 was a great time for commodities. At that point, you know, we had the tech bubble. Tech companies weren't really appealing to people anymore. People got burnt on them. So oil was a main characteristic here of that time. Also real estate. So that's what's caused the 2007, 2008 financial crisis. A lot of people started putting their money in things that were real. We are probably about to enter a new era where, yeah, people are going to be more interested in buying things that are real. So I think real estate will start moving up strongly into next year, and oil. And that's probably what's going to cause a break in what's going to happen in 2027. Sometime in 2027, something's going to break. All right. I'm not going to say it's real estate or oil being too expensive, but it could cause something like that. And we'll have to look at loans. A lot of AI loans are being issued right now. So in that sense, I think we're going to have to look at corporate debt. So the corporate debt is probably where things are going to break. Corporate debt. Come on. All right. So here, this tweet. So I read this yesterday. I'll read it again. AI borrowing is skyrocketing. Big tech firms issued a record $120 billion in corporate debt in 2025 to fund AI-related investments. Issuance surged 500% compared to 2024 levels. This is also more than in the 4 preceding years combined. Amazon, Google, Meta, Microsoft, and Oracle are now expected to issue 18% more debt in 2026, bringing the total to $142 billion. In one scenario, they could raise as much as $317 billion, a 164 year-over-year spike. AI debt is skyrocketing. So, yeah, we are entering a new era here. All right, so you can screenshot that. Now, let's go back to this. Okay, we are about to break some new lines, so I think this will be good. I think oil definitely is something I'm going to be bullish on. If you look at the relative chart here, the relative rotation graph chart, if you look at where things are standing, there's very few sectors that are actually trying to stay in this left-hand area, okay? One of them is semiconductors here. You can see SOX. All right. You have disks. So RAM. So DDX over here. We have some hardware. Okay. Over there. So computer hardware, semiconductors, and disks. Now, outside of that, we're starting to see improvements in certain areas. Biotech is one. And OSX is oil services, so refineries. So refineries are starting to improve. Okay, refineries are starting to improve. Now, what's following after refineries are oil and natural gas. This is where I think these guys will start moving over in the coming months. So that's why I'm pretty bullish on UwU. UwU leverage ETF. I think this will do very nicely. I hope we can get 200% by the end of the year on those two things. Oil, natural gas. I'm probably going to have to start looking at individual small cap oil stocks, refinery stocks, natural gas stocks. Natural gas will probably suffer a little bit right now. It's kind of been stuck in a range. They kind of got a pop from the huge snowstorms, but for a structural change, we need to see China and Europe really start demanding natural gas. Now, Europe, because of their green energy initiatives, really hate using natural gas, but if they're desperate enough, liquefied natural gas and liquefied natural gas shippers are probably going to be the ones to look at. See the bank indexes, yeah, they're going up. Pharma, yeah, going up. Airlines, okay, that's improving. But yeah, we'll see. We'll see what else is going to improve in the coming months here. All right. Anything else? Let's see. Blah 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 blah. So he starts talking about the Australian dollar, whatever. Let's see, what's this one? Okay, the stock market gets a vote. To gauge the stock market's perspective on commodity prospects, we need to examine certain cross-sector relationships more closely. Chart 5, for instance, contrasts my inflation with my deflation-sensitive index. The inflation series comprises several industry groups responsive to commodity prices, which typically outperform during the cycle's latter stages. Conversely, the deflation series includes defensive and interest-sensitive sectors that tend to excel during the cycle's early phase. What Chart 5 clearly shows is that fluctuations in the inflation-deflation relationship align reasonably well with CRB movements, thereby reflecting the stock market's ongoing assessment of inflationary versus deflationary outcomes. Currently, the ratio is rising sharply and has convincingly broken through a decade-long resistance trend line. It is unequivocally signaling expectations of higher commodity prices ahead. So I think we're stuck with the high inflation. Okay, so if the new Fed chair is going to be dovish and starts decreasing interest rates too quickly to promote employment. So there's going to be a battle. This is like 1966 all over again. And 1966 was the last time we had the year of the fire horse. So Chinese astrology is going to help me out here. So if we're going to go back to 1966, and you can watch like 2 streams ago, I read a little preamble about the 1966 bear market and all that stuff. The Fed is going to choose this time around to support employment rather than support fighting inflation. Because Donald Trump probably does not want to see the stock market crash. So if we start crashing in these months going into May, Donald Trump is going to save it. All right. The new Fed chair is going to quickly try to save it. And we should have a really huge pump going into 2027. A more massive pump. If that's the case, then the next time we crash, sometime in 2027, it's going to be even larger than anyone would expect. Might even be bigger than 2007 to 2008, you know? And then the Democrats will probably win the election quite easily. Gavin Newsom will become our president, I'm pretty sure at this point. They'll blame everything on Trump, and that'll be the end of it. So that'll be it. What's the deal with Palantir? Short Palantir. So if you've been watching my streams, I've been saying short it for a while, so that's it. It's time to short. That's it. I bet markets will go crazy this summer. They're only down because of the weather. All right, D-Dog. Yeah. Okay. Let's see. CRB. Reflecting the stock market's ongoing inflation. Okay. Currently, the ratio is rising sharply and has convincingly broken through a decade-long resistance trend line. It is unequivocally signaling expectations of higher commodity prices ahead. Okay. So, good. So, oil is the place to be. I think I'm pretty convinced. So, if you've been getting into oil this week, good for you. That's what I've been doing. And we should start looking at stocks in that sector, refineries, all that. And finally, I can get out of tech, man, for good, because I'm sick of tech. Time to get back into oil. Oil's always fun, especially during COVID. Those are real fun stocks to be in. All right. Let's see. Don't think I need to read that. All right, good. Let's see. Let's read this one. Materials. Materials. Also industrials, right? So Caterpillar, GE, Veranova, so nuclear. So yeah, there's some industrial stocks we have to look at too. If you're going to put $20,000 in for long term, where would you put it? UwU. Yeah, UwU. That's it. Leverage, ETF. There you go. I mean, last year I did SOXL, leverage semiconductors. But this year, it's the year of oil. It's not the year of tech. So that's where we're going. Okay. And then I'll get back into gold and silver some other time. It's that time in the cycle for materials. Do the technicals agree? The business cycle is nothing more or less than a set of series of chronological sequences. It starts with the Fed throwing money at the economy with the objective of driving interest rates lower. That action encourages new home purchases and additional construction. Those houses have to be furnished. In turn, this spending encourages manufacturers of consumer durables to expand their plants and equipment. It's not surprising, therefore, that investors begin the stock market cycle by emphasizing interest-sensitive and defensive sectors such as consumer staples and healthcare, only later turning their attention to companies that benefit from strong capital spending and firm commodity prices. My economic work suggests we are currently positioned at the late stage of the cycle that benefits the mining, energy, and basic industry sectors. But what are the technicals saying? So look at the material sector, the spider material sector, ETF XLB. We talked about this last month quite a lot. Our first chart features the materials sector spider fund XLB on a long-term basis. It is tentatively breaking above a resistance trend line. I say tentatively because this is a monthly chart. Unfortunately, we have to wait until next week to see whether the end of month closing prices agrees. It is also evident that the long-term KST has crossed marginally above its 9-month moving average for its 9th buy signal since the turn of the century. All right, good. Please go up. I want to buy some lithium mines too, man. Chart 2 plots daily data and reflects a much stronger breakout as the price has surpassed its resistance trend line emanating from late 2021. The most impressive action, though, comes from the special K, which you can read about here. So I'm not going to go into that. Okay, that's his special indicator. This indicator is constructed by combining short, intermediate, and long-term rates of change into a giant, jagged momentum indicator that reflects swings in the primary trend. When it is possible to construct a trend line lasting 6 months or more, its violation is typically followed by a bull or bear market in the price series being monitored. Chart 2 displays such a setup. It also reveals the SPK has crossed decisively above its signal line. Oh, that's good. Yes. I alluded earlier to the fact that sectors such as materials underperform at the beginning of the cycle and post their best relative performance towards the end of it. So we are at the end of the bull market. It is time to get into aluminum, steel. Yes, a lot of these companies we've been starting to talk about. Chart 3 demonstrates this point well, as the XLB RS line had been in a declining trend since late 2022. Now, though, it has surpassed its bear market trend line and 200-day moving average. The SPK for relative action has also violated its downtrend line and crossed the signal line. Most impressive of all, and perhaps least appreciated, is a 20-year high in the daily KST in the bottom window. On the one hand, there can be no doubt that it's an overbought reading, which increases the odds of a correction. On the other hand, the achievement of a 20-year high in relative momentum is a sign of an extremely young and vibrant bull market, and therefore a reversal of the previous downtrend. Okay, so on a relative basis, the XLB over the S&P 500, right now, we are seeing signs that materials is about to have a bull market versus the broader tech. Okay, because you have to understand, the S&P 500 right now, 40% of it, market cap weighted, consists of 7 companies: Google, Microsoft, Tesla. Oh, what else? I forgot some other guys. I only remember Google's like, what's like, who cares? Meta, blah, 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 blah. Nvidia, who cares? I'm done with those companies. Who gives a crap? It's time to get into materials, guys. Chart 4 shows that a turnaround in relative performance has the potential to be a big deal. That's because the downtrend featured in chart 3 is revealed as the latest down leg in relative action from a trend that began way back when in 2008. So since 2008, right, we started rotating into tech. And then since 2013, semiconductors really started their uptrend. And we are at the end of the line for this, I think. At this point, the RS line has surpassed its downtrend line and 12-month moving average. That's the first positive moving average crossover since 2023. Note also that the KST is within a fraction of a buy signal. Okay, so yeah, and the last time we had something good was after 9/11, right? So I think we're going to be at a moment where we start crossing things again. We'll probably have a 9/11 moment sometime. I don't know. Maybe China will just attack Taiwan for no whatever reason. Fine, go ahead. While my interpretation of the technicals argues in favor of higher prices for the XLB, chart 5 cautions against rushing in. That's because the percentage of XLB components experiencing a 20-day EMA above its 50-day counterpart, Silver Cross, has reached the overstretch zone. The vertical lines identify periods when the oscillator exceeds the red dashed overbought zone and then recrosses it on its return downwards equilibrium. A short-term decline usually transpires. So yeah, we definitely have to watch how the silver and gold, palladium, platinum is kind of spilling over. So we're gonna have to watch copper for sure, nickel, okay, and steel and aluminum. In a bull market, it's possible for this indicator, uranium as well. Forgot about uranium. Uranium's doing real nicely, but it took a deep cut when silver took a hit. It's possible for this indicator to remain overstretched for an extended period. This chart merely throws up a yellow card and suggests that any correction is likely to represent a buying opportunity. That's what we're looking for, buying opportunities here. Finally, we tend to focus on the SPDR sector-based ETFs because the stock charts platform provides us with a wealth of internal sector indicators such as the Silver Cross series. However, Dow Jones also provides the sector indices with slightly different orientations. In that regard, chart 6 shows that the iShares US Basic Materials IYM has triggered a decisive KST buy signal and broken far more decisively above its former resistance trend line and moving average than the XLB. The reason is that this ETF contains a larger exposure to mining stocks, which have been performing well recently. Yeah, mostly the silver and gold miners. So we have to watch that. That's it. Yeah, so you got that. So I said copper, okay, nickel, all right, okay, uranium. Uranium is also kind of energy too. So uranium has that dual aspect to it. So if oil is going up and people are doing nuclear, are looking at nuclear energy as really viable, then yeah, uranium will be an interesting play this year, I think, because it has both that materials aspect and energy aspect to it. That's why uranium, you see it follow the silver thing, because it's kind of like, yeah, it's a material that has heavy influence in the futures market to all the other ones, but at the same time it's also an energy thing. So it could just start following oil more prominently, because if demand for oil starts increasing and the price of oil becomes worse and worse, people are going to start looking at other places to get their energy, and it's not going to be solar. All right, if you need a lot of energy for AI, guess what they're going to do? They're just going to be building more and more nuclear plants. Like, solar is a scam. All right, let's be real. All right. Okay, that's good enough, guys. Just 15 minutes after the hour. I think we're done here. I don't think I have any videos I really want to show you guys. I'll save it for tomorrow. Yeah, I'll save it for tomorrow. All right. Yeah, I think we're good. Okay, and remember, I'll be working with Universal Jones on more Boit videos. We're gonna be working on that. That's a project that we're gonna do, and you know, remember to sub to my other channels because I don't know if like this channel is gonna get struck, like the Urban Landlord channel, again. If we get our third strike, it's gonna be gone. Okay, and it got demonetized too. So, like, I think John's in a little pickle with YouTube. I think YouTube is really eyeing Urban Landlord channel. Hey, I'm 10 minutes behind the stream, catching up at 2x, but wanted to ask if you were in oil when it went below 0. No, I didn't do that. I mean, like, there were so many stocks that were like so attractive back then during COVID that like you couldn't pay attention to all of them. So yeah, I mean everything was so good, delicious. Everything was so delicious. Especially like you look at the vaccine stocks were very prominent plays too. So you bought any vaccine stock, you would have been doing good. Software is struggling due to the hype over AI. It will correct soon. It's already correcting. Bro. Like if you look at the IGV ETF, it's been terrible since October. And last week it was down 7%. This week it's down 7%. So it's already corrected. It's a bear. So the S&P might not show that, but yeah, we're in a bear. So okay, let's see. Anything else here? I covered that. Let's look at Bitcoin. Yeah. Look at Bitcoin. Okay, come on. Load it up. Come on, load it up. Damn, it's down 3% tonight. Woo! We got a 13 count. We got an 8 count here. Okay. All right. Okay, let's see. Combo 13, sequential 8, C5 on the D wave. Interesting. Man, it better hold. It better hold here. It better hold the line here. Let's see the weekly. Okay, if it doesn't bounce this week, if this thing doesn't bounce, we're going straight to 52 to 58, that area. So I guess tomorrow I'm really going to have to be serious about another MSTR short. Okay, so looking to do that tomorrow. Short Bitcoin tomorrow again. Looks like every day it's just short Bitcoin day. Fuck, dude. This is terrible. This is ugly as crap. Like, you look at this lagging line on the weekly here. Okay, let's see what worst case can it go. I think it's going to go to 40 or 25K right away. Maybe. All right. Guess Bitcoin's the play to make tomorrow. Man, I don't know. But yeah, if you look at the IGV, so this is software. So let's look at the weekly chart. You see that? It's right back to here. Okay, so this was the start of a 1 count. So this level at 82, it should try to hold. If it can't hold into next week and we blow right through it, then shoot, we can go down to 70. But yeah, pretty much it's a bear market, man. So the top was here, September, at this C5 here. So I'm assuming it's gonna try to bounce, maybe go back up a little bit, but I don't know. Maybe it'll have to go down a few more weeks before it tries to do a bounce. But it's almost at the April lows. So yeah, this is terrible. This is horrific, man. Let's see. Let's see. Yeah, man. So it's gonna enter correction territory pretty soon, right? Yeah, that's pretty much a bear market to me, man. Fuck that. Let's say it goes down to 70. Yeah, that's real correction. That's a deep correction. All right. Okay. Yeah, this is bad. I think we're gonna have some earnings next week with some of these software companies. So you'll find out real soon. You'll find out real soon if this thing wants to puke some more next week. We'll have some nice earnings next week. Yeah. Okay. All right. See you guys. Bitcoin will crash this weekend, I believe. Well, you know, we got Japanese elections, Dalmatian. So Japanese elections on Sunday. If the yen really goes wacko to the dollar, yeah, it will be bad. It'll be a bad Sunday for sure into Monday. Any specific aluminum, uranium, or copper nickel tickers? Oh, aluminum only. I only use AA, so Alcoa. Okay, Alcoa is the one to follow. All right, so watch what it does. See where it pulls back. Okay, it's definitely gonna have to pull back some more. And then if you want to do nickel, there's an ETF. Nickel. Am I spelling nickel right? What the fuck? Sprott. Let me Sprott. So you can look up the Sprott ETFs. They have copper, so you can use SPO. COPP. Okay, and then COPJ for the smaller miners. There's also another ETF called COPX for copper. Okay, so let's look at the COPP. Okay. Yeah, I'll be watching this one. It's down through 4%. So yeah, wait for these to pull back. And then I believe they have a nickel one. Let's see. NIKL. Okay. All right. Yeah. So you see that? Like, it really took a hit with silver. Same thing with uranium. So URNM. 8%. Yeah, I'm watching them. They should be good buys pretty soon. You can buy them, and then once silver and gold stop goofing off and stabilize, it should be fine. So you have to wait for silver and gold to reduce in volatility. As long as they keep going down and up and down and up, I wouldn't be touching these things. They all tied together right now in the futures market. Okay, people are pulling out money from one place and they're running around putting in somewhere else, and then they run around back. So all the traders in the Chicago commodities futures trading, yeah, they're all going crazy. Let's see what else. Nickel, copper. Yeah, I got that. Yeah, that's it. And I mentioned them before. Yeah, I didn't talk about them much because I know they're gonna go down with silver. Once I saw silver puke like that, it's like, oh, can't touch these. Wait for it to settle down, and then you can get into them. So there's no rush. Oil is fine because oil is its own beast. So that's why I only recommended UwU. UwU is perfectly fine. So we're in the 5th candle this week. So I think, yeah, we're steadily going up on UwU. As long as we can cross the 40 on UwU, I think we're good to go. That's it. That's all I gotta recommend. Gotta be patient, you know. People shouldn't be buying all the way in and different times. You gotta time it. You gotta learn to time the markets, and that's what people tell you. Like, oh, you can't time the market. You can't time the market. Whatever, dollar cost average. I don't believe in that shit. I want to make the most money efficiently and saves me aggravation to do anything. So I just watch, be patient, find the right place to get in, find the right place to get out. That's it. You know, don't need to be governed by emotions or the news. Don't need to watch CNN and CNBC and go stir crazy like everyone else, like going screaming the sky is falling or holy shit, we're going to the moon. And if you start acting like that, you'll never make real money, dude. You might as well just buy and hold and shut your ears. All right, good. A very good day today. Hopefully another great day tomorrow. Let's short some Bitcoin. All right, see ya.